Okay, in this interview, we have Don Durrett. So last time we spoke, Don was saying he was a little weary of what was happening in the overall markets and specifically the metals. We were probably just over $2,000 when we talked. Maybe we had corrected slightly. And Don was saying, I'm expecting November to be not such a good month. And so Don has a lot of wisdom to discuss here today. I'm going to link his website right there down below in the description. One of the best in the business if you're interested in miners and metals. Truly one of the best in the business. And we're going to be discussing miners, metals, the economy, ways to prepare yourself, and a lot of other interesting things. So make sure you hit the like button on the right side right over there or the left side right over there. It'll send this out to more people. And thanks for joining, Don.
Yeah, thanks for having me back, Jake.
So weird times, huh?
Yeah, it is, especially in the markets. I mean, this week, jumping over 30,000. People that are been analyzing the markets, for a long time. This is a very strange time, trying to kind of understand or try to estimate what's going to happen 2021, 2022. Quite fascinating. I listened to an interview yesterday with Stephanie Kelton about MMT, and that's in my head a little bit. So I'm definitely going to talk a little about MMT today. But the Biden administration coming in, I think that's going to happen. That is another factor. So we got a lot of changes going on here, and it's pretty interesting times.
Yeah, that'll be interesting to talk a little bit. I haven't done much research into Kelton. Obviously I've seen the rounds from everybody's post, but let's definitely explore that. Interesting time right now. One of the things that, I guess I would like to lead with is you and Rick Roll, both of you guys. I probably had you guys on about 3 months ago, and you both were feeling a very strong pullback. And right now, the sentiment in gold and silver is, it's it's so low. You think you couldn't even get $1 for it. And so right now, it's a weird time where you're on Twitter too, so you see the majority of people, they're saying things like, if it doesn't go up tomorrow, I'm throwing in the towel. And so it's a weird time. You anticipated this type of pullback. It has went below 1,800 now, and a lot of people think it even has further to go because of some end of the year tax sell-offs. What is your take on what's occurring right now? Does it get you excited? Does it get you weary? How are you feeling?
Okay, so after we had the run last year from March to August, when I did my newsletter in end of August, I said that we're going to get a significant correction after that run. So I thought it would go, worst case was 1850 on silver, and that I thought the range was something like 22. So I thought it said 2220 or 1850 was what I thought could happen. I was hoping it wouldn't happen, but those are my targets for what could happen. For gold, the range was 1,700 to 1,800. So, I was hoping it wouldn't happen. Like I was hoping we wouldn't get down to 1,800 and we wouldn't get down to 22. But, that's what happens in these bull markets, is that you make runs and you get corrections. And that's what we're experiencing. But I don't think, now we're getting really close. And I also said it's all November through the whole month. And now we're at the end of November, and I think that the correction's ending. And I think we're going to repeat the last 2 years where we had good first quarters for gold and silver. And I'm expecting another run here. I'm expecting gold to go over 2,000 the first quarter. So the only thing that's really going to prevent that from happening, and I've always said this, the kryptonite for gold is the economy. If the economy's doing well and people have confidence in the economy, they're not going to go to gold, because the big money really moves gold and silver, and the big money is not going there. And the only reason big money goes to gold or silver, they usually don't go to silver, but going into gold is for hedge purposes, and because out of fear. I call it the fear trade. So the fear trade is kind of, it's been hit hard this month. People are like, I don't need gold. I'm selling my gold. I'm going into stocks. That's what we've seen. I think we're going to have a bit of a Christmas rally. It amazes me. I didn't think that we were going to make a run at 3,700 on the S&P 500 or 4,000 S&P 500. I didn't think it was going to be possible because this economy is not strong. But what's happening is people have confidence in MMT. They think that it's okay to have deficits. Deficits don't matter. So let's go into Kelton, right? I want to get into this right off the bat because I think this is the most important thing about where the price of gold is going next year. So Kelton wrote a book called The Deficit Myth, basically saying the deficits don't matter. So she wrote a book to prove what Dick Cheney said. And what Dick Cheney said when he was vice president, everybody laughed at him. He said deficits don't matter. And now, I don't know how wise he was, but he's basically coming. Now people are proving what he said. And so her book literally tries to prove that, which is amazing to me and she's an economist, and she basically works with a lot of leading Democrats. So let's talk about what deficits do, right? Let's talk about what money printing does. The first thing that it does is it creates bubbles, right? So we're seeing these bubbles in the markets. When you get bubbles, you're seeing bubbles in assets, housing prices. So what do bubbles do? So bubbles make money go to, a lot of times, to the wrong people. For one thing, right? Because the middle class and the small businesses are trying to drive the economy don't necessarily get those valuations. But the real problem with when you create these bubbles is that you don't get any price discovery. So if you don't get any price discovery in the markets disintegrate. The markets can literally get destroyed. Over a period of time, as you get rid of price discovery, if you just keep, funneling, this year we're going to have a deficit of 3 trillion. Next year, we're probably going to be 2 trillion is my guess. And if the economy doesn't come back quickly, you're going to see more injections. And that's just the United States, right? So MMT is global. And so just price discovery, as price discovery slowly gets impacted, banks have a hard time knowing, okay, who do I loan money to? Who do I trust? So if you don't trust anybody, the economy, the capitalistic economy, withers away. It literally destroys itself. Through MMT is a destructive force. And here we have people saying that deficits don't matter. The only thing that matters is how you spend your money. You can borrow as much as you want, but you need to spend it correctly in order to pump up the economy. That's the theory behind it. But I gave it a name. I called it TI economics, which is for total insanity. It's TI economics is basically what MMT. So right now, everybody seems to think it's okay that a $3 trillion deficit is okay because we can borrow if we need money. And the reason why people right now are really comfortable with this injection of money, and then this, we just got Janet Yellen as a secretary. So Janet Yellen in the Fed. Now, Mnuchin, he just made a deal, first time ever in our history, made a deal with the Fed and said, if I need you to buy something, I want you to print the money and buy it. He didn't even go to Congress to do that. So now we have Janet Yellen there. So if they get into any problems, the Fed and the Treasury now are linked at the hip. And so the Fed has the ability to print money. The Treasury has the ability to ask for it. And that's where we're at right now, which is going to create more bubbles. It's going to create, again, the capitalistic market is being destroyed. At a certain level it is. And so what's that, the outcome of that, we don't know if it's going to happen or not, right? It's all uncertainty. I call MMT an experiment. It's an economic experiment. That's all it is. Now, Japan has been able to get away with it for 30 years. And so we think we're going to get away with it too. But I read yesterday where this year alone, the Treasury has to turn over $7 trillion. So they have to literally borrow $7 trillion this year. I don't know if that's true or not, but that's what I read. Somebody put a chart out there. It was a reliable source, I thought. But if all that money gets printed, it's going to create more bubbles. It's going to create more, lack of price discovery, and we don't know the outcome of this. So for me, I have to be bullish gold, but Simultaneous to that, I know this has been a long answer, but simultaneous to that, it actually gives Biden potential here. If inflation does not tick up, so inflation right now is 1%. If you look at CPI is 1.2%. So inflation is kind of dead right now, the way that we measure it. So if inflation doesn't tick up to 2%, if it stays under it, in theory, people will have confidence and the economy will do fairly well next year. And then gold and silver won't go up because people will say, I don't need gold because the stock market is going up, even though it's a bubble. So that's what we're up against.
Yeah, that's probably my biggest concern, especially when you see big price slaps like this. The result of it is, that layman people have no concept of a real thesis behind anything. They just follow price movement. And you saw that in the gold rally too. People that were buying it to send it higher and higher and send the miners higher to higher. It was just FOMO people. They weren't actually people that it could tell you any lick about the metals. And so what concerns me is if they've been able to quell inflation so far, then what concerns me is if they can blow a bigger wealth bubble, then you could actually have people run out of gold. Although if they need money printing to do it, you would think you would get some pumps in the metals through the process. And so to me, it's a big gray territory where I don't really know what's going to happen, to be honest with you. I'm kind of out of words, I guess. It's such a weird spot to be in, especially when, I know that the volatility is natural in the process, but can they keep inflation from happening? That's or price inflation, I guess we should say, because some purists might say, well, we already have monetary inflation, but we're talking about price inflation. Can they keep that from happening? So far they've been able to, and we've had 21% of all the US dollars created in history were created this year. We still haven't had significant price inflation.
All right. Yeah. The only place we've had it is in assets. So wage inflation has been kind of, dead to neutral, right? There hasn't been very much wage inflation. So if people aren't getting paid more for work, and then people can hire people and they don't have to give them higher wages, then that tends to slow down the velocity of money. And so in theory, it's possible that 2021 could be, somewhat tepid inflation. And so we might have to wait. Q1, I've been saying that 2021 is a much more important year for gold and silver than 2020. 2020 was that was the beginning of the bull market, but you need to sustain it. 2021 is going to be really important. So Q1 is really important for gold. And how are investors going to anticipate inflation? Are they going to anticipate that what I just said about, wage inflation isn't going to take off? And so without wage inflation, maybe we don't get CPI, and then I don't need gold. That's a possibility. So we have to wait and see. Now, the other side of the coin is you have to be patient if you're gold and silver. So a lot of people are traders. Like you said, people are jumping in during this rally and the mania. They were just chasing the FOMO and the MOMO. When I say MOMO, I'm talking about momentum.
Momentum, right?
Yeah. So if gold doesn't appreciate in Q1, you have to be, as an investor, you have to be very patient, because all this money printing and MMT eventually should lead to a significant rally in gold, just on the money supply alone.
That's what I wonder too. If the talks of inflation being necessary to move gold and silver are overstated, and if it will really move just from new money supply alone.
All right. And I think eventually it will. The big money is people always talk about manipulation, and I think manipulation is quite real. I mean, look at how many banks have been fined for manipulating. I mean, we got banks fined for it and then turn around and get fined for it again a couple of years later. Right. So you can see they have an incentive here. They've never, ever put the CEOs up there and said, okay, why were you doing it? Right? These trials are all about you broke the law. It's not about the why thing. It would be really interesting. You tell us why. We want to know why. We're not throwing you in jail. All we're doing is fining you. Tell us why you're doing it. That would be an interesting hearing, wouldn't it? I'd take the fifth. We're not going to talk about that, right? They would never tell us. But besides the manipulation, we're getting off track here, is we're trying to understand as a gold and silver investor, how am I going to do next year? When do I get into these stocks? Do I get into them now, or do I wait and see what happens? Do I wait until we get back over 2000 or we get back over 1950? I mean, I like to always buy the dip, and so I bought a little bit early, right? Today was probably a good day to buy. But some people like to be very conservative, and they like to get a really good entry price, and they like to get a good momentum wave. So the next momentum wave, we're gonna have to wait a while. You're going to be getting in early. If you get in right now, you're really early because we don't know when that momentum is going to switch. I would say 1950, 1970 is really the next flip on gold. And the next flip on silver isn't until 31. And ideally, I think 31.50, 32 is probably the real big flip in silver. Once we get there, I think that's when you're going to run to 50. So the big flip is there. So, and remember 29 was the high in August for silver. So that could be resistance. So we could go up, tap on 29 and then go all the way back to 25. That happens all the time. As you go up and you hit a resistance and you don't get through it. And that's a possibility. That's why I say 31. Once you get over 30, that could be a false breakout and then it goes back under 29. I think if we get to 31, I think that's going to be the breakout, the next big move. So maybe it'll happen in the first quarter, but we have to be patient and wait and see what happens. Until then, like I said, if you're a momentum investor, you're going to have to be very patient. Otherwise, if you're aggressive like me, you just keep buying the dip.
So silver, do you think that, let's say that Biden ends up being brought in on the 20th of January, and they've got all this, renewable stuff. Can you see an instance where there's a pressure on the price of silver because of the industrial demand, or not really? You think it's got to come from the precious metals rally?
Yeah, absolutely. The latter. It has to come from investors. But investors could bid up silver based on the Biden policies, depending. And it's not going to happen in the first quarter, the first half of the year, I don't think. On anticipation, I don't think so. It would have to be, the only way that, let's say, the Biden administration could push the price of silver is if they put in some type of a deal for, say, solar panels. If they gave everybody a $500 or $1,000 write-off on if they bought solar panels, they did something like that. Yeah. Because then people would anticipate the silver demand, and you could see a $2 pop in silver the next day, something like that. Also, wind uses a lot of silver as well. So this goes back to MMT. So if you look at the Biden's plan, if you will, their economic plan is kind of twofold. One is to kind of get away from the tariffs that Trump was doing and go back to a globalist free trade policy. Now, they don't talk about this publicly because that type of a policy doesn't really help the middle class. But if you look at the Obama administration, that's pretty much what they did. They were kind of friends with China. They were friends with Japan. They were friends with Europe. And those countries are, in many respects, they make more stuff than we do. And so we have a trade deficit. And so I don't think, Biden, he's actually given lip service and said that we're going to do America buy first. but I guarantee you that's lip service, and that we're not going to see any industrial policy where they say you have to make the wind turbines in the United States or you have to make the solar panels in the United States. If he does that, that's more of a populist. That's a big flip. That's a big switch. That's what he should do, but I don't think he will. I think that I think any of that, America first, buy first America, I think that's all going to be just, that's not going to be what they do. It's going to be what they say kind of thing. But he wants to, his economic, okay, so I said it was twofold. So that's one, the free trade globalism is one. The second part of that is going to be non-market driven green energy policies. So the reason why that's going to be really big in the Biden administration is because that works tandemly with climate change. Climate change is a big part of their policy, right? So if you combine climate change with green energy and economics, you can combine all three of those. What you're going to get is basically non-market driven economics. So if you look at infrastructure is non-market driven, right? They just write a check. Here's a check for, $1 trillion. Go build some new roads, go build new internet infrastructure, go build a new airport. That's not market driven, right? That's government spending to drive up new jobs. Now that failed under Japan. Isn't it interesting that we're now emulating Japan's MMT? I don't know if you're aware of this, but throughout the 90s, Japan had a whole problem with deflation, and they had a problem with growth, and so they kept doing these infrastructure bills, one after another after another. And what they found was they basically don't do anything, because once you spend the money, the jobs disappear. So you spend the money and you hire 10,000 people, and then it's done, and then the 10,000 people lose their job, and then you do it again. It's not self-sustaining, so it's not market-driven. Another thing that Biden wants to do is he wants to retrofit houses. That's another one and done. But if the materials that are used in the houses, yes, if he mandates that all the materials for retrofitting are made in America, then it's possible that company that makes the materials, the problem is it's not sustainable. It's more of a one and done. But if he created one where the better thing to do would be, instead of mandating it, would be say, okay, we're going to give you a tax deduction if you retrofit your house, and then the companies that are making, then that's kind of ongoing. So if he's smart about it, but governments are never smart about these things. So my point is that most of this economic driven stuff is like it's non-market driven, so it's not sustaining, and so you're not going to really, the weakness we have in America right now is we can't grow at 3%. I love that Jeremy Grantham is one of my favorite macroeconomists, but he's getting pounded on the chin right now because he went short. But Grantham's been doing this for a long time. He's twice as smart as I am. And one of the things that he says is that America can no longer grow at 3% because of demographics. So if you look at the baby boomers, they have all the money and they're retiring. And as they retire, they just they don't spend their money. They just sit on it until they pass, and they give their money to their kids. That's a generalization, but you know what I mean? The majority of the money, once you stop working, you just stop spending to a large degree. And so the baby boomers are all retiring and they're stopping spending. And the younger kids, Gen X, Gen Y, Gen Z, they're not buying houses as fast as the earlier generation. So they're not spending as much money, and there's not as many of them. So Grantham's point is that America can no longer grow at 3%. It's impossible. The best we can do is probably 2%. But now we're going to use this MMT, and we're going to use these non-market strategies. And so even 2% is probably not going to work. So we're going to go into a Japanese style economy where we start growing at 1%. So America is going to go at 1%. But the problem is that with 1% growth, America wants to fund all of these various programs. We want to basically have debt forgiveness for college education. We want to have free preschool, right? We want, so we have all these new programs that are going to cost a boatload of money, but yet we're growing at 1%. Is that really doable, right? So, I mean, it's really, really ugly if you look out over the next, let's say, 4 years of the Biden administration. we're not going to grow at 3%. We're overdue for a significant recession because the last recession was 2007-8, right? And this recession, in many respects, really didn't get a chance to play out because we use this M&T to inject money to not allow any businesses to go bankrupt. Now, the small businesses are going bankrupt, absolutely, but we didn't let any major corporations go bankrupt, not a single one. We didn't have a Lehman event. This wasn't the recession that we needed to clear stuff out, like underbrush in a forest. You got to burn that stuff out, prevent the fires, right? So we haven't let the economy, and now with MMT, the philosophy behind MMT is you never have to have a recession ever again. So I don't,
That's what I was going to say to you then. In response to that is, I think they've kind of made it clear we may never have a Lehman type of event again because they've pretty much said that's not going to happen. And so if you take them at their word for it, which I believe, I'm not in the camp. I do not think that we're going to have some massive crash that lasts for 5 years and we're living like in the 1930s. I think it is far more likely that the opposite happens and they just inflate everything away. And so if we take them at their word for that, then you start to go, we may never have. We may only have recessions when the government tells you have to sit in your house for a couple months. And so then it makes me go, all right, so if one of the biggest problems for gold is the economy, I don't foresee how Q1 is positive. First of all, most people are they're deeply psychologically scarred. And even just for the psychological factor, for most people to resume any semblance of normalcy, they need their quote unquote vaccine to go back to whatever they need, whether it ends up working or not, killing people or not, they just need to know that they have it. And that's not going to happen. And I don't think that's going to happen in January. Let's say it happens towards the end of Q1. I think that either way, they're probably going to hit, the stock market's going to head higher, regardless of the economy. And so then I go, if they can keep printing the money and they keep driving asset prices higher, then isn't that bullish for gold? Even if the Dow's making all-time highs, is that bullish for gold or is it not? Because then people get complacent and they say, well, why would I buy gold if this is going to go up in a straight line forever?
Right. Again, we have to make assumptions, right? That's why I keep saying that MMT is kind of an experiment. And I also use the terminology that MMT is a wild card. So we don't know exactly how they're going to be able to control gold, simultaneous to this money expansion period that we're in. I'm very bullish that they can't stop it from going higher. Now, one thing about gold is gold is valued on a global basis. And we're not the only country that's experimenting with MMT. China is doing it to a large extent. Japan has always done it. They started it. Europe is doing it. The European Central Bank is doing it. So you're getting money expansion from all of these central banks. So I think you have to be bullish to expect gold to trend higher at a certain point. Now, we don't need, as gold and mining investors, we don't need it to go very high, right? If gold goes to 2,500, we're looking at the HUI, going up to 1,000. We're looking at
that's what I think people don't understand. Maybe we could elaborate on that. I feel like people think for them to get a 5-bagger or a 10-bagger on their total portfolio, gold has to go to $10,000, and they think silver needs to go to $350. Dude, I'd be set if silver just tops out at 55 and gold goes to 25 or 27. And I think you hit the nail on the head. And it's almost like this unrealistic expectation. And maybe it has to do with people, like someone like yourself that really understands the HUI. So you're saying that you don't need, if we've already topped out at basically 2,100, if we can retest that and move to 23 to 25, it should be a good run, right?
Yeah, let's talk about the leverage that exists in the miners. So we've been talking about the potential of gold being somewhat controlled, somewhat stymied, if you will, say over the next, 3 to 6 months, maybe even 3 to 12 months, because of a somewhat, muddling economy that's not, showing a little bit of momentum, showing a little bit of strength. You have COVID vaccine coming in. The vaccine is definitely going to help the economy in a significant way. So we say by June, COVID's gone, or gone to a large extent. People are going back to work, and the economy's kind of, getting an injection, if you will. So the economy's getting a bit of a boost. So, the next 3 to 12 months, we don't know what's going to happen with gold, right? So we talked about that for the last 20 minutes. But now let's look at the leverage that actually exists in the miners. The gold actually got healthy when gold got over, say, $1,700. The entire gold industry got very healthy. So we're over 1,700 right now. You can make an argument that gold's healthy at 1,600. Because the average price for a producer, the average all-in price is around $1,100, $1,200. So the margins at 1,600 are pretty good. But once you get to $1,900 gold, you have some really serious margins. You're talking about $800 an ounce. So the miners right now, their balance sheets are cleaning up, at 1,800 pretty significantly. Once you get over 2,000. And I'll talk about silver in a minute. Once you get over 2,000, you get to 2,200. You're almost at $1,000 an ounce, or you are at $1,000 an ounce of margin. Now, this is free cash flow per ounce mined. So the whole sector is basically doing incredibly well. And people are going to go into those stocks. So the HUI right now is under 300. I think it's like 275. It went up a little bit today, 280. I'm sorry. It was at 625 the last time gold in 2011. The HUI hit 625. So it's less than 50% of where it's at. So at current prices, these miners are just very, very cheap. So sentiment, you can see the sentiment is dead basically. And the reason why, and it doesn't really make sense to me. So the reason why is because people remembered that the last bull market was very short-lived and it crashed hard afterwards. So after the HUA got to 625, it immediately turned around and started going down fast. And so everybody thinks it's going to do the same thing. And they're very tepid, very timid to buy these miners because they think that this bull market is going to die and the miners are going to be sold off. But the miners are really cheap. Gold went down, and today's a good example. Gold went down $20 today, and the HUI went up. And the reason why is because the miners are going, we're smelling out the bottom here. We're not smelling a crash. So let's look at some of the upside potential. I said leverage earlier, the leverage in miners. If you get to $2,500 gold, I think the HUI is going to be somewhere between 700 and 1,000. And I really think that you're looking at that point. You're looking at the larger miners, at the Newmonts and Barricks, and they're the largest ones, so they have the least amount of leverage, right? You're looking at them going up, doubling and tripling, and doubling, absolutely doubling, and probably tripling in value. So what does that mean to some of the other miners, right? The ones that aren't the large cap miners. If you look at some of these mid tiers, they're going to go up. If you get to $2,500 gold, they're going to go up 3x to 5x. And that's with the bad sentiment today, even if the sentiment does not improve. If the sentiment improves and people start to become comfortable that the price of gold is going to stay at $2,500, then your leverage goes even higher. Then you're looking at returns that could be double what I just explained, probably 1.5, but you're looking at higher returns because, again, the sentiment is low today. If the sentiment improves, the leverage goes even higher. So you're looking at the overall, and I haven't even gotten to the juniors yet, right? I'm talking about the mid tiers being 3x to 5x.
Right.
So you go down to the developers, you go down to the explorers, you actually have more leverage. So you're looking at an industry that has massive leverage, and all we need to do is for gold to go up to 22, 23, 24, 2500, and you have an industry that's going to be on fire, if you will, in a positive way. And that's really the starting line, right? If we get to $2,500 gold and then inflation kicks in and gold goes to 3,000, now you mentioned $5,000, $10,000 gold, but if we look at miners, if you value a miner at $3,000 gold, you have to just be stunned at the leverage that these miners have, stunned. And that's the reason I've been doing this for 10 years, because I believe, well, my website is 8 years old. The reason why I've been doing this for so long is for this once in a lifetime leverage situation where you literally make more money in a 3-year period than you make in 20 years. It's a once in a generational trade. I thought it was going to happen in earlier than this, but the bull market kind of fizzled out really quickly in 2011. I think this one is the real deal. The last bull market lasted from 2003 to 2011, or it might have been 2002. When it broke out, you can look at the chart from, I believe it was $300. You can see the chart was like this, and then it went up. That breakout lasted until 2011. And now we basically went sideways, or we went down from 2011 to 2013, and then we went sideways from 2013 to 2019, and now we're breaking out. So this breakout, I think, is going to last a while. I'll be very surprised if it's over, if you will. We don't get back into the 2000s. We don't get to 2,500. We got to be patient. I mean, it's possible that MNT is going to pushes us out to 2022. I'd hate for that to happen, but it's a possibility.
So let me pull up the screen share of a tweet that I saw. It's a chart, and I want to show you this chart right here. So can you see this, Don?
I see it.
Yeah, so as you can tell, it says silver and gold. Why do both metal charts from March lows look eerily similar to this, and are us metal investors in denial? And it is a chart, as you can see, if you want to take a minute to look at it. It starts at disbelief, and it goes up into euphoria, then it goes into complacency, then into anxiety. Why am I getting margin calls? This dip has been longer than expected. My investments are with great companies. They'll come back. Panic. Shit, everyone is selling. I need to get out. Anger, depression, disbelief. And so I was wondering if you could comment on it. And one of the reasons that I wanted to bring you on right now is because right now, the sentiment is very low, and there are a lot of people that are saying that this chart right here is accurate and that this is over and that this is done. And so I was hoping maybe you could comment on it a little bit.
All right. So if you go to the euphoria, the very top, so that's 2011, right? Then all the way to the bottom is 2013, right? The beginning of that, and then it's trading sideways from that anger capitulation from 2013 all the way to 2019 was what we just got through, right? That was the trading sideways, which we did, and that pretty much kicked everybody out. And then now we're at the hope place. We just broke out, so we're right now at hope. We're hoping that this bull market has legs. And now once you get to 20, and this is beautiful because once you get to 2,100, that's when your optimism kicks in. So we're in hope, and we're at that first, so this is the first correction of the bull market, right? So you see we're in the hope, you see that first downturn there?
Yeah.
That first, right there. That's where we're at, right there, right that downturn. So the next move is Q1, And the next move up is basically, that could be all of 2021. That next move up is we're going to go from hope to optimism. And so right now we had the first correction, and we're going to hope that this bull market has legs. And once we get over 2,000, that's when the optimism kicks in. 2,300 is when we get the belief. 2,500 is when we get the thrill. And then 3,000 is the euphoria.
Very interesting. That was even better than I would have since I put you on the spot on that one. So you think this was posted as if euphoria was at 2,000 back in the summer, and now we're back down over here? No?
Well,
okay.
in theory, that's a possibility, but this is a cycle. What you're showing me right here is a cycle. You can't have a cycle in 6 months.
That's true. Okay. That's a good point.
Yeah.
Yeah, that's a really good point. So let me ask you now, there's a lot of, and that was beautiful. That was amazing. I should have led with that. So let me ask you then, there's a lot of make about price manipulation in metals. And to be honest, so I'm 29. So I didn't really, I bought some silver when I was younger, but nothing, I had like 20 grand of silver or something like that. And then in 2019, kind of studying everything and seeing how bad everyone had been beat down for 10 years, with how much was going on, this was the latter half, the summer to the end of 2019. We had the repo stuff. Gold was still like $1,400. And I was like, man, this looks like a bargain. And I started buying a lot of physical gold, started buying a lot of physical silver. And I swore that I wouldn't get into the miners because I was like, yeah, I don't trust the stock market. Then I got into the miners. And so it's been an interesting ride for me because I invested basically between everything 7-figure. I went from 0 to 7 figures really quick. And it's been an interesting journey because we had the March sell-off and then it went back up and then it went back down again. And I can't help but look at this and looking at the charts where, at 2 a.m. it just goes through the floor. And there's a lot of people saying, why would you ever invest in something that is manipulated and it's so thoroughly manipulated? And then I started to think, well, what's the difference between 2011 and now? Well, one of those things would be there's better technology. Is it possible that the technology is so good at manipulating the price of metals that we are the biggest idiots in the entire world by doing this? What is your stance around that? Because a lot of the sentiment is around that. I see even a lot of people that post about Bitcoin and they like the idea of gold, but I've seen them say, why would I ever buy something that is so heavily manipulated? And then there's the crowd of Bill Holters and such, whom I've had on the channel numerous times, love Bill. And Bill says, there's a point at which COMEX will fail. And then there's a part of me that says, is that total foolhardy? And we're setting ourselves up to be destroyed by very super high-tech gadgetry that can manipulate the price at a click. So what's the point in being involved?
Yeah, you make some really good points. So the first one is the mining business is terrible. It's just a terrible business. So not only do you have price manipulation, but these investing in miners, not only is it, so it's a terrible business because the resource, once a mine gets mined out, it's mined out, you got to go find another mine. And it's really hard to find good mines. So it doesn't matter who's out there, eventually their businesses turn south. So it's not a long-term thing. And then that's just part of the weakness of the industry. The other one is, for instance, exploration plays. So exploration plays, they basically have a printing press. So they print new shares. Whenever they need money, they dilute shares, right? The printing press is the ability to print new shares. You got to find people to buy those new shares, but they tend to give away free warrants to find more people to buy them, and it dilutes them. So it's really hard to make money on exploration plays. Then development stories are really, really hard because way development stories work is they cost a lot of money to develop a mine. So if you're an early investor, you tend to get diluted into the ground. So whatever you start out with, you're usually underwater, and you're hoping that they do first pour, when it usually takes anywhere from 3 to 10 years to build a mine. And the average is probably, over 5. And so if you get in early, you got to wait for first pour to make money, and then they sell out, and you end up losing money. So in your development, exploration plays, it's usually 1 out of 10 is a good return, does good. And exploration is about the same. I mean, maybe 2 out of 10. So the mining industry, people don't get into miners. Yeah, there's a manipulation in price. That's definitely, I think, real and happens. So you don't see this trend. You never see a lot of trends. And then the mining industry itself is terrible. So what in the world are we doing this for? Well, we're doing it because what I said earlier about this unbelievable leverage that exists. Now, again, it's all potential. But me and you, Jake, if the price goes to 3,000, there are going to be smiles on our faces, right?
Mm-hmm.
We're betting on that potential. And the only reason I got involved in it is because I didn't think that debt is a good reason for economies to grow. In other words, you can't grow an economy on debt. Now, that's how I got involved. My first gold investment was in 1991.
That's the year I was born.
Interesting.
Yeah.
That was my first gold investment, and I continued to invest all through the 90s in gold and gold miners. And the reason why is because at that point in time, we got into this mindset that it was okay to extend Keynesian economics. Keynesian economics was supposed to be an economic philosophy that injected money, deficit spent during times of downturns. Keynes came out in the 30s, and he said, okay, you're in a downturn. The way to get out of it is to do deficit spending. But in the same thing, simultaneously, Keynes said, but once you start growing again, pay that debt off, right? That was the Keynesian. So we got to the 80s, and Reagan said, nah, we're going to do a new Keynesian. And they called it, and George Bush Sr. said, that's voodoo economics. You can't spend money during times that are good, right? And then we said, no, yes, we can. And so Reagan was spending money when we were growing, and we continued that all the way. But then the Republicans in the early 90s with Newt Gingrich said, hold it. Keynes had a point here. We need to balance the budget. And Gingrich balanced the budget. We actually had a balanced budget in 98, 99. And then 2001 hit, and we basically said, no. What the Republicans were trying to do, that doesn't make any sense. We're not going to try to balance our budgets, and nobody's talked about it ever again. But I got involved in gold because I thought Keynes was right, that deficits do matter. There is, and it isn't a myth, and that deficits lead to the expansion in gold prices. Now, some people can laugh at me and say, okay, Don, you've been spending all this money on mining stocks and gold, and you haven't done, that great. I've done fine, but I would have done better in the stock market, I think, because I invest in a lot of miners, which are very risky. If I would have invested only in gold and silver, then maybe physical only, then maybe I haven't done the math. I might have been doing better overall. But my point is that the reason we do it is for the leverage. And I think there's been some really good investors over time, and they've said that the best way to make money, and I think Stanley Druckenmiller put it best. He said that you have to spot things that other people can't spot. You have to get in early. That's how you really make your money. He's not a value investor, like Warren Buffett. Warren Buffett goes and looks at value. Druckenmiller, he looks for opportunity. And he always talks about his best, he calls them trades. His best trade was when he got into something before other people, and then that trade went to the moon. I'm more in the Druckenmiller camp than the Buffett camp, instead of going value. But I actually combine them. And most people would say it's impossible to do. But I believe that if you can see a trade coming, that is actually a value investment. Most people, how in the world is a gold and silver mining investment? But I'll take my portfolio off over anybody's. I don't know how you feel. But right now, my portfolio, I'm not going to trade it with anybody.
I have to be. Go ahead, please, Don.
So I believe that my vision is right and the value is right. That the gold price is going to go higher and the miners are going to get the leverage that I anticipate. And that's the reason I'm in it.
So let me, going off what you said, and I think this is a good way to kind of wrap home. I wanted to address a lot, especially with someone like yourself that kind of forecasted this. I wanted to address a lot of the concerns that investors might have. I just made this channel to try to help out the market a little, but I wanted to do one more quick screen share and bring to your attention here this, because I thought I just posted this. I found it online somehow. I'm really glad I found it. And it says, "It never was my thinking that made the big money for me. It always was my sitting." Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls and bull markets and early bears and bear markets. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level which should show the greatest profit, and their experience invariably matched mine. That is, they made no real money out of it. Men who can be right and sit tight are uncommon. Jesse Livermore. I wasn't anticipating putting this screen share up, but I was reminded of it when you were speaking there. What are your thoughts on that?
So first of all, Jesse Livermore, he's a bit of a legend. So this is a well-known quote. In that book, Reminiscence of a Stock Operator, amazingly, he was a trader in the 20s and the 30s.
Oh, wow.
Yeah, and this book was written a long time ago, and people still read it. People still, they recommend this book. So Livermore, his story is pretty fascinating. He started with nothing and became one of the richest guys on Wall Street as a trader. So he was one of the, the early guys. He was doing stuff that other people weren't doing, but, he definitely did get out at certain times. But for him, his trades were always longer in duration because he talked about sitting tight. But I think that he made a lot of money off of short trades as well. But he sat tight long enough, but he was more of a visionary guy, like I was talking about. In other words, be right and sit tight. That's really a quote. That's an outflow or outcome of Livermore. Be right and sit tight. That really came from Livermore because he said it back in the 20s. But it's, but once you get it right, that's a lot of times trading is really hard to do because you have to, how much longer are you going to hold it before you get out?
I guess I'm putting it more in terms of our conversation about gold and silver. And I just thought of it because you were talking about basically seeing a trend early. Now you're in this sitting tight. What were you going to say, Don?
Let me interrupt you. So this quote actually got into my head early on as an investor. Early on, I would say 2004, 2005, I basically bought into this philosophy of being right and sitting tight. And I wasn't going to sell, right? I wasn't going to, and I made it a commitment to myself that I wasn't going to be a trader. And now, I constantly second guess myself. But, there's always that rule. Rule number one is this, and rule number two is refer back to rule number one. So my rule number one is sit tight and wait for that bull market to happen. So I'm totally bought into, what Livermore said. I'm waiting. I'm sitting tight, and I'm referring back to rule number one. And if I'm wrong, I'm wrong. It's been a long wait.
What would make you think that we are wrong?
Gold would go under $1,000. But right now, the thing that would really upset me is if gold went under 1370. So there's two lines in the sand right now for me. And it's 1370 on gold because that was where it broke out. That's what started the bull market. And 1850 on silver. if either of those get taken out, and 1850 is much more likely that it gets taken out than 1370. 1850 get taken out, then that's nasty. That's really when your bull market starts to break down. It definitely broke down in silver, and then it starts to break down in gold. But if you look at that 6-year trend, that 6-year channel, of gold, if you go and look at the chart where we broke out at 1370, if we go down and bounce off it in 1370 as support, the bull market's still on, in my opinion. I think we got to go all the way down under 1370 for this bull market to really end. And I think that's the reason why I think it has legs. And so now I think 1850 will hold on silver. And if it does hold, then, and I think it's going to hold because of all the things we talked about the money printing. But again, I don't know what would shake me out, if you will. It would be really, really tough to shake me out. Some people are getting shaken out of Bitcoin right now, right? People are bought at 18,000 and they're getting shaken out already. A lot of people are. We're down to 17,000. Those are people, they wouldn't do well buying miners.
No. Yeah, right. Yeah, it's and that's why it's really interesting, and why I try to ask the best questions for an average person like myself to someone like you, is because most people aren't like you. Most people are not spending all this time with all this historical context and charts. All they're doing is having emotional reactions to prices going up or down. And there's people that bought at 1800 or 1900 in gold that already think the gold rally's over, and they left and they bought Bitcoin at 1950, and now they're selling out of Bitcoin as well because now the Bitcoin rally's over to them too. And so I guess kind of in conclusion here, what do you think are the most important things for an investor to keep in mind?
The first one is to have diversify in your portfolio, which will give you more confidence. If you're only in juniors and only have a couple producers, and you have this type of correction, then you probably got hit on the nose pretty good. And a lot of those people, it's like, oh my goodness, what am I doing this for? So if you're diversified, and that's why I talk about a pyramid approach in my book, it gives you a better foundation. Now, the foundation of the pyramid, the bottom of the pyramid is basically physical. So you got to start with physical. And the more physical you have, that's probably not going to zero. So it gives you a little bit more confidence. And above that is majors. And a lot of people don't like to have majors in their portfolio because I don't want a major. It's not going to give me anything. Well, I started out with majors. That's where I created my foundation, because I know that most of the majors aren't going bankrupt, and they're probably going to come back. So you want to have that. And then the next one is producers. And I think you need to be overweight producers, quality mid producers. So, at least half the pyramid, up to 2/3 of the pyramid should be kind of quality stocks. So then you can mess around. I think I only have 8% exploration stocks in my portfolio. A lot of people, they want to go for the home runs, and they're 50% exploration stocks. And if you're going to get through these up and downs, these hills and valleys, I think diversifying is very important. And then you have to determine how much of your overall portfolio is going to be in gold and silver. So I've always been, 90%, around 9%. I'm very heavy. And then that kind of lightened a little bit because I bought crypto. And it's worked out great for me because I got into crypto early. And it'd be nice if we could talk about crypto, but we're out of time. But it's also another one of those great leverage plays, I think, and a good hedge play against inflation, and good hedge play against the economy having problems. So yeah, people should think about it.
Yeah, absolutely. So a beautiful sunset right now, it's starting to go down. Nothing better than a desert sunset, huh? It's pretty. I guess we're looking at the same sky since we're only 90 minutes apart. So let me ask you, what are you excited in conclusion? What are you excited about right now for your life or for 2021? What are you looking forward to?
I'm excited about crypto. I'm glad you asked that question, so I can talk a little bit about crypto. I'm apprehensive about gold. Gold. It looks like it still has this wind at the back, and it looks like it's going to have a good Q1, but I don't know that. So I'm a little apprehensive about what gold and silver is going to do in 2021. I'm praying that we get to at least 2,300. But let's talk about crypto, because that's what I'm excited about, really. First of all, I want to make a point about what Bitcoin is, because a lot of people don't really understand it. And all Bitcoin is a collectible. It's not a cryptocurrency. Now, all the other cryptocurrencies are cryptocurrencies. So they call them S coins. And I think you know what the S stands for. Bitcoin is not a cryptocurrency. And that's the reason why people give it this uniqueness. And the reason why it's a collectible is because of the way it was created. The way that it was created was very unique, and nobody else has been able to do it. It's really the only fully decentralized coin. And the way that it's designed is designed that most of the mining is early in the process. So we're over 18 million Bitcoins, and there's only about 2 million more to go, and it's going to take 100 years to do the rest. So it keeps getting small. Every 4 years, it gets smaller and smaller, the amount that gets mined on a daily basis. And so what that does is it creates all of these characteristics of what a collectible is. So in many respects, Bitcoin has nothing in common with the other cryptos. The other cryptos are currencies. They are cryptocurrencies. Smart contracts. I mean, if you look at some of the other ones like Dash and Monero, those are currencies. Fed coin. You look at Ethereum, smart contracts. Those are not collectibles. Bitcoin is a legitimate collectible because it has a limited size. And you can't compare anything to Bitcoin. You can't put Ethereum next to Bitcoin and say that they have comparisons, because people are going to buy Bitcoin and hold it. Bitcoin in many respects is like a bar of gold. You get a bar of gold, you put it in your safe, and you let dust accumulate on it. You do not sell it. That bar is it's like in India, in the Indian families, they get gold at their wedding present. Those same wedding presents in gold stay with that family for their entire life. They never sell that gold unless they absolutely have to. That's an asset that they hold, but it's an asset for security because it's a collectible and it holds its value. Bitcoin is the same way. You buy Bitcoin, you put it on a hardware wallet, and you never spend it. Never, ever. It's for life. You pass that on to the next generation. That's what Bitcoin is. It's a collectible. That's not what you do with any of the other ones. So that's the real reason why I'm excited about it. So once Bitcoin gets to, say, $20,000 and stays above it, say once it gets to 22, 23, 24, it's a lot like gold. Gold's trying to get to 2,200, 2,300. Bitcoin, 22,000. Once it gets to that level, then you're going to have all the billionaires in the world are going to want some. And there's not that many to go. There's only 46 millionaires in the world. There's only 21 million Bitcoin. And 90% of the Bitcoin is tied up. It's tied up by a small group of people. 4.5%, I think, of the people own 90% of the Bitcoin. Those are the 1%. There's a 0.01%. Those people are not selling their Bitcoin. They're hodling. They know it's going higher. They're not getting rid of their Bitcoin at $20,000. Guarantee you. So there's very little Bitcoin that's out there available. So right now, if you look at Square, and you look at PayPal, and you look at GBTC, those three alone are soaking up the Bitcoin demand. Just those three. We're not even talking about the exchanges. We're not talking about Coinbase. We're not talking about Binance or any of these other big exchanges. Just those three websites are soaking up the demand. So let's say a billionaire comes in and says, I want to have 100 Bitcoin. He's going to have to go out there and buy it from somebody that already owns it. So then, okay, that's just the billionaires. Then if we look at the pension funds, if you're a pension fund, let's say just in California alone, so every state in the country, and if you look at the entire world, you look at Canada, you look at Europe, all of these pension funds, there's tons of them, right? These pension funds right now have zero Bitcoin. Let's say that they want to have 1% Bitcoin inside their pension fund. Right? 1%. Then if you look at all your insurance companies, you know how insurance companies work, right? They take your money and they invest it. They're going to want maybe 1% Bitcoin. there's not enough Bitcoin to go around, basically. So it's a collectible. So if everybody's hodling it, and again, 4% of all your Bitcoin owners own 90% of the Bitcoin. That 90% is hodled. It doesn't move. Those addresses are called whales. Those addresses never move. So you got 10% of the Bitcoin out there that's trading. More and more of that is hodling. So you have very little amount of Bitcoin that's available for trading. The only way you can buy Bitcoin is to buy it from somebody that already owns it, because they don't mine enough of it. And in 4 years, it halves again. So right now we mine 900 Bitcoins a day. In 4 years, in 2024, it drops to 450. Today, when we mine at 17,000, that's $15 million of Bitcoin a day. That 15 million is just soaked up really quickly by Square, by the other two that I mentioned. And they get sucked up really quickly. So you don't have it. Okay, so it's $15 million a day. In 4 years, it goes to 450. That is 7.5 million. So if the demand stays the same and the price stays the same, there's only going to be 7.5 million Bitcoin mined in a single day. $7.5 million. That's nothing, right? Nothing. And so if Bitcoin doesn't, so Satoshi designed it to increase in value over time. It's a collectible. People need, and I've been saying this, and I haven't heard anybody else really talk about it. If people start realizing what Bitcoin really is, that it's just a collectible, that people want to own it just because it's rare. That's the only reason they want to own it, because it's rare. And the other thing, the reason why it's rare, and this is where you're going to really connect the dots, is Bitcoin is a fully decentralized network. Fully decentralized. In other words, you can't shut it down. So once you own Bitcoin, it's not going anywhere. That ownership is solid as a rock. It's more solid than the Federal Reserve. It's more solid than the US banking system. There's nothing that's more solid than that ownership of that Bitcoin. The only thing that can happen to that Bitcoin is the price can go down. That's it. So what's the odds of that? The odds are low because of what I just explained to you. Once it gets to a certain price point, everybody wants to own it for its collectability factor. It's like Picasso paintings. So let's say that there's 10 Picasso paintings, and you have the chance. Right now, the only way you can buy a Picasso painting is if you're a millionaire, multimillionaire, right? What if there was a possibility that you could have part ownership of that Picasso painting? Would you do it? People would do it. You can't. But if you could say, okay, I'm going to buy $10,000 of that Picasso painting because you know it's going to go up in value because that's all they do, you'd probably buy part of it. It's the same concept with Bitcoin. It's just a collectible. You need to wrap your head around that. And then also wrap your head around the fact that Bitcoin is unique, has nothing to do with all the other Bitcoins. All the other Bitcoins, every single one of them has nothing in common with Bitcoin because they're just not designed. They didn't create the same way.
Good stuff. Yeah, we'll do another talk just on Bitcoin. I just had Robert Breedlove on. We haven't published it, but I just interviewed him the other day, and that would be a fun thing to go in more depth on. I'm overweight the metals and the miners, but I own some too. So but that'd be a great way to wrap up. Why don't you tell everyone your website real quick, and then I got to roll out and go be babysitter for my daughter.
Okay, so it's goldstockdata.com, and the website's all about gold and silver mining stocks. So there's 824 stocks in my database, so basically every miner in the world. So if you own any gold and silver miners, then you're going to want to check out my website because it's a fantastic database. There's more than just a database that comes with it. A newsletter and a forum. The private forum is probably worth the admission. So Jake, thanks for having me on.
Yeah, awesome. I'll put the link right there down below for everyone. Truly fantastic website. So go ahead, check that out. Hit the like button on either side, on the right or the left, and give us your 2021 gold price predictions in the comments right there down below.